5 derogatory accounts that may cause you to be denied for a home loan. Today, I want to discuss what can cause you to get denied for a home loan, because this year it is actually my mission to help as many people become prepared or get their credit ready for home ownership as possible. So today I want to go through the most 5 common accounts or most 5 derogatory accounts that can get you denied for a home loan. If this is your first time here, my name is Jennifer Campbell. I am the CEO and owner of the Credit Laboratory. I am also a speaker and an author. I recently got and I've lost it. Oh, it's right here. I recently got a book published on Amazon, and it is for homeowners. It is called Clear to Close Credit Guide, and it goes through 12 different things that can cause you to get denied. But today, I just want to talk about the top 5 things. And without further ado or holding you up, I'm going to jump right in. The first thing that can cause you to get denied for a home loan when it comes to your credit is child support. Child support can cause you to get denied for credit. Before I even get started on child support can report on your credit reports. And it is a law that states that child support can report on your credit reports as a means to help the kids or to make sure that the kids have everything that they need. So child support can report on your credit reports, but child support in the arrears is what causes you to get denied. If you have child support in the arrears, you need to try to set up a payment plan or something, or get your balance paid up, because as long as your child support is in the arrears, you will get denied for a home loan. So you will have to get the child support out of arrears or set up some type of payment arrangement with the state to try to get that balance taken care of. Now, if child support is reporting on your credit report and say it's not in arrears, because I've seen it happen to some of my clients. And before I even go on, you guys, I'm not an attorney. This is not legal advice, and this is not financial advice. This is for educational purposes only. And I'm just going through some things that I have saw, that I have experienced personally, and that my clients have experienced with me helping them. And I've helped over 400 people with their credit. So what I'm telling you is kind of repetitive, and I've seen it more than once. Now, if you would say if your child support is not in the arrears and you owe $25,000, and that's the balance that's showing, they will calculate that and your monthly payments into your debt to income ratio. Now, that may not cause you to be denied for a home loan, but it may cause you to be denied for a smaller amount, because they do have to factor in the payments that you make each month. So that is child support. That is the first one. The next one, you guys, is going to be late payments. Late payments can also stop you from getting approved for a home loan. Most lenders do not want to see you with a late payment within the past 12 months. If you have late payments within the past 12 months, that can cause you to get denied. But some lenders have something in place where they may be able to help you if you don't have many, or where they can overlook, say if you have one 30-day late payment. But if you have a 30-day late payment, 60-day late payment, 90-day, 120, 180, or even the COs for charge-off reporting, for charge-offs and collections within the last 12 months, that can stop you from getting denied for a home mortgage. And it stops you from getting denied for a home mortgage because to a lender, it looks as if you are in maybe a financial crisis, or as if you cannot pay all of your bills on time. And if just maybe 3, 4, 6 months ago, you couldn't pay your bills on time, you still, they feel like maybe you still not in a place to be able to pay your mortgage payments on time. So late payments within the last 12 months can stop you from getting a home. The first one is child support in the arrears. Even your balance can be factored into your debt to income ratio. Late payments can also stop you from getting approved for a home loan if they're within the last 12 months. So if you have charge-offs and collections that's reporting at CO, and even charge-offs and collections with a balance they can stop you from getting approved for a home loan as well. So if you have collections, I'll say, reporting, first thing you need to do is try to request validation directly from the debt collector to see if you can get that account removed from your credit reports, or at least try to find some type of errors reporting on your credit reports to get the collections removed. With collections, if you pay a collection before you request validation directly from the debt collector, it's as if you validated the account for them because you've been making payments on it. So you can't say that it's not correct because you've already been making payments. So when it comes to collections, before you make a payment, make sure you ask for validation. When it comes to charge-offs, it's going to be a little different because they're still with the original creditor. You're going to want to check your date of last payment so that you can figure out your date of first delinquency to see when you actually made that last payment. That's going to help you determine the statute of limitations as well as the reporting time of that account. The statute of limitations does not start when you open an account. It starts when you miss your first payment, your first missed payment that takes that account into charge-off status. That's what starts the time clock for your statute of limitations and as well as the reporting time for accounts. And another thing, like negative accounts can report up to 7 years, but positive accounts can report up to 10 years. Because I know a lot of people contact me and they're like, well, I had this account and it's paid off. I don't know why it's still reporting on my credit report. Positive accounts can report for up to 10 years after they're closed. So child support, late payments are two things that can stop you from getting approved for a home loan. The third thing that can stop you from getting approved for a home loan is going to be bankruptcy. A Chapter 7 or Chapter 13, Chapter 11, Chapter 12, whatever. A bankruptcy can stop you from getting approved for a home loan. For example, if you're in Chapter 7 or Chapter 13 and the bankruptcy gets dismissed or discharged, you have to wait at least 2 years, depending on what's in your bankruptcy paperwork and depending on the lender. Because I've had some lenders tell me 2 years. I've had other lenders tell me 3 years. So it's going to depend on your paperwork and your bankruptcy and the lender. But after you have been dismissed or discharged from a bankruptcy, Chapter 7 or Chapter 13, you have to wait the allotted amount of time, which is normally 2 years. Now, if you are in a Chapter 13, you can get approved for a home loan while you are in Chapter 13 after you have made 12 consecutive on-time payments. So say you've been in Chapter 13 for a year, you haven't missed any payments, and you've made all your payments on time, you can get the court to approve for you to get approval or to apply for a home loan. So if you're in a Chapter 13 and you want to get approved for a home, you need to get approved for your home or try to get through the process while you are in Chapter 13. If not, if you wait until your Chapter 13 is dismissed or discharged, you will have to wait that allotted amount of time. So bankruptcies, there's child support, late payments, and bankruptcy. Those are three things that can stop you from getting approved for a home loan when it comes to your credit. The next thing, you guys, is going to be evictions. That's number 4. The fourth thing that can stop you from getting approved for a home is going to be evictions. Let's say, because it's a difference between, like, say if you're evicted and then you just leave the apartment and they charge you for carpet or something like that for cleanup, is different. Both of them can show on your credit report, and an eviction is going to be public records. So it will be found during the underwriting process. So if you have evictions with balances, you want to try to get those taken care of. You can get them removed from your credit reports. That's the same thing with bankruptcy. You can get it removed from your credit reports, but it can still be found on Pacer. Pacer is a government website, and it is basically where all of the court docs are, and anybody with a Pacer account can go in there and look up court cases. So if you have bankruptcy or evictions, it can be found. You have an eviction with a balance. You do have to take care of that eviction or the balance on that eviction before you're approved for a home, because When a lender sees that you have an eviction and it still has a balance on it, it's as if, like you can't pay for anywhere to live. And if you didn't pay for rent, they're going to feel like what's going to make you pay for a mortgage. So if you have evictions reporting with a balance, you need to get those taken care of. That's number 4. It was child support, late payments, evictions, and bankruptcy. Now we're on the 5th thing that can stop you from getting approved for a home loan, you guys. The 5th thing that can stop you from getting approved for a home loan is defaulted student loans. Defaulted federal student loans, especially. There is a difference between federal student loans and private student loans. Those federal student loans, they don't go away. They're with the government. They have to be taken care of, even if they're deleted from your credit reports, because I know a lot of people contact me and they say, can I get my student loans deleted? Yes, you can. But if your student loans are in default, which means you haven't been making any payments, the student loans are charged off or in collections, they will be found during the underwriting process, because the underwriter will be looking at your public records. They're going to look at a CAVERS report, and there are other reports that they look at, because they don't look at the credit reports that we see. They look at, it's a tri-merged credit report. And basically that's just all 3 of your credit reports together, and they're going to be looking at your FICO credit scores. But if you have defaulted federal student loans, they have to be taken care of. There are 2 ways that you can get those taken care of without having to make any payments. The first way to get your student loans out of default is by contacting your student loan servicer and seeing if they offer rehabilitation. Rehabilitation is going to be a 9-month program that allows you to get your student loans out of default. After 9 months, the mark of default will be removed from your credit reports, and you can go back to getting student loans again or other federal loans or federal financing. Because as long as you got student loans or any other federal debt that's in default, you can't get a loan. You cannot get a loan for other federal accounts. Say if your student loans are in default, you're not going to be able to get approved for an SBA loan because it's with the government. Your student loans have to be taken care of first. The first way is rehabilitation. That's 9 months. Now, with rehabilitation, that can only be done one time in the lifetime or the time frame, the life frame of the loan. It can't be done more than one time. So you have to be careful with your rehabilitation. Now, say if you don't want to do rehabilitation, you don't have 9 months to wait, or you've already been through rehabilitation, you can get your student loans consolidated. If you consolidate your student loans, you can go in and look for some type of payment plan so that you're able to make your payments, your monthly payments on time without them going back into default again. What I've been on for the last 15 years with my student loan is income-driven payments. Income-driven payments. I give them my W-2 every year, and they determine that my payment, whatever it's going to be, whether it's going to be $0, $5, $10, or $20. But you can get on an income-driven payment or other payment plans that they do have available. And you can look on studentaid.gov in order to find different programs available to get your student loans out of default. Now, those are the 5 most common accounts that I have seen my clients get denied for when it comes to a home loan. Child support in the arrears, late payments within the last 12 months. They're in Chapter 13 and they let their Chapter 13 get discharged before they want to apply for a home. Then we have our student loans. And there's one I keep forgetting, you guys. I got to go back in and look at it now. Evictions. An eviction can get you denied as well. Now, those are not the only things that can get you denied, because I do want to make it clear, when you do apply for a home loan, it's more than just your credit score that they're looking at. They're also looking at your credit profile as well, and they're looking at your debts and your income. It's called your debt to income ratio. They're going to be looking at that as well. They're going to be looking at your credit profile. They got to make sure you have more than 1 or 2 accounts reporting, and they got to make sure that you have more than a couple authorized user accounts open. So you do have to worry about your credit score, your credit profile, your debt to income ratio as well. Now, I do have a little bonus for you guys when it comes to getting approved for a home loan. And it's going to come with the first thing I want to talk about, because a lot of times I know I have missed it. It's going to be your checking account. You guys, when you apply for a home, they look at everything. And when I say everything, I mean everything. They're going to look at your credit report and your public records, and they're going to ask for your checking account statements. And when they're asking for your statements, they're not going to want to see any overdraft fees. They're not going to want to see, I want to say is deposits, cash deposits over $200. You're going to have to explain where they come from. So overdraft fees, they're not going to want to see them. And they're going to request your bank statements from the past 2 or 3 months. So they're not going to want to see any overdraft fees with your deposits. Try not to deposit any cash over $200. You're going to have to explain it. And another thing, you guys, they're going to be looking at, and a lender, I talk to a lender almost every week, the same one. And she's taught me a lot of this stuff. So I know it's very, very accurate. They also look at your withdrawals. Say if you eat out a lot and you got the Starbucks, the McDonald's, the Burger King, like they look at all of that as well. So when you get ready to apply for your home loan, make sure you're being careful with your checking account, because they're going to be watching what you're doing. They got to make sure you're responsible. They got to make sure you have the money. They got to make sure you can pay them their money back. And yes, they're going to ask you for your documents more than one time. They're going to ask you for your documents when you do the pre-approval. Then they're going to ask you for your documents again when you go into underwriting, depending on how long it takes. If it takes more than 30 days, things could have changed. So they're going to request that paperwork again. So be careful. No overdraft fees. Be careful with your cash deposits, and be careful with those excessive charges, you guys. And another thing that I want to hit on, just because it is tax season, it is tax season, and I know we're all looking to get the biggest refund back. But while doing so, I want you guys to look for credits and not deductions. And I say that because the deductions take away from your income. If you take a lot of deductions just trying to get a refund for this tax season, that can hurt you for this year and next year when it comes to purchasing a home loan or getting approved for any type of funding that requires you to verify your income through your income taxes or through your tax returns, because they're going to be looking at your AGI. So you have to be careful with taking a lot of deductions as well when it comes to your tax returns. Another thing, I got a couple extra tips for you guys. And if y'all have questions, please let me know. Drop them down in the comments. And I see y'all have been dropping some. I'm coming in just a minute. I got a couple extra tips for you guys. And if I need to go back and hit on anything, if I missed anything, or if you came in late, please let me know. Some extra tips. And this is some things that I went through. The first thing, even if you're applying for a home and your credit's not bad, I suggest getting access to your credit reports, basically your FICO credit reports. And there are websites. I found a website where you can get all 28 of your credit scores free for 7 days. That's in the link in my bio. Now, the first thing you want to do, review your credit reports. If you have a lot of extra names, a lot of extra addresses, employers, and phone numbers, you're going to want to clear those up. You're going to want to clear those up. When I went to purchase my home, I had to fill out something called an explanation form or something. I had to explain all of the extra names on my credit report. They wanted to know why I had this address for 2 months or this address for 6 months. They want you to explain all of your addresses. They want you to explain phone numbers. They want you to explain employers. So it's best if you just go ahead and clear up your personal information that's reporting on your consumer reports. You only need one name, one address, your most recent address. You don't need any past addresses on there. One name, your most recent address. You don't really need any employers or any phone numbers reporting on your credit reports, and make sure your date of birth and your social security number is correct. You're also going to want to stop applying for things, because if you start opening up a lot of new accounts, that can cause your credit scores to lower. It can mess with your credit age, and it can also hurt your debt to income ratio depending on what you're opening up. So we want to stop applying for things, and we want to start paying down as much debt as possible. And remember this too, you guys, and I'm finished. I'm going to go back and look through the questions. Your approval is not guaranteed until you get to that closing table. When they tell you you're approved, don't go and buy a car before you close on your home, because that messes up your debt to income ratio. I've seen somebody lose their home that way because they went and purchased a home before they actually close. Don't go get the furniture accounts either until after you close. You can go the same day. What I did was after I closed that day, that's when I went and got my furniture, and I went and got my Lowe's credit card and my Home Depot's credit card, because when you're a homeowner now, when something breaks or tears up, it's going to be on you. So I know that I needed those, like the accounts for Lowe's and Home Depot to help me out. But just don't apply after you've been approved. Don't do anything else until after you get to that closing table. Now. Thank you guys for the follows. Thank you. I really appreciate it. Not really true about eviction. Well, Miss Lifestyle, give it to us. What is it then? Your lender may not, but my lender, if you have an eviction, that means you can't pay your rent. And if you can't pay your rent, what makes you going to pay your mortgage? So that's really a no-brainer to me, sweetheart. So, Lisa Inspires Lifestyles. Phew. Okay, boo. You got a home while facing eviction. Good job, lady. Good job. And you have a good job. Okay, boo. Don't get you what, boo? Don't get you what, sweetheart? Let me see what that says. Sound like it said don't get you. Don't get me. Oh, I'm not going to get you, boo. I'm not going to get you. Baby, everybody's situation is different and everybody's lender is different. And when it comes to applying for a home, I wouldn't want to apply for a home with my scores. You know how they say that you can get approved for a home with a 580, a 600, or a 620? Me personally, I would not, because everything else is going to be higher. Your interest rate is going to be higher. Your insurance is going to be higher. Even when you apply for car insurance, they look at your credit score. So, yeah. You were still denied, Miss Spokenly Unique. When I first got approved for my home, or when I was going through the process of getting approved for my home loan, I was on the verge of not being able to get approved because I had $100,000 in student loans. And at that time, they were using 1% towards your payments if you were in deferment. So they used 1% of my amount. I just did get in there. At the time I was working, I was a pipe welder, so I just worked a lot of overtime. And some kind of way, I don't know what my lender did, but he was able to work his magic, and I was able to get approved. But now, Miss Spokenly Unique, instead of them using 1%, now they use a half of 1% when it comes to calculating your payments for your student loans if they are in deferment. After bankruptcy, Mr. Tay Bone, you have to wait a minimum. I used to tell people a year to 2 years, but I went to one of my home buyers seminars and I was doing my thing. And it was a lender there who told me that he didn't take 1 year or 2 years, that it was 3 years. So it's going to depend on what's in your paperwork and the lender. I normally say you have to wait about 2 years after bankruptcy in order to get approved for your home loan. But if you're in Chapter 13, you can get approved for a home loan before you get out of Chapter 13. Yep, Chef, you do got to be patient. Yes, I do fix credit. I help people, but that's not why I got on here today. If someone wants some assistance, you can get it, and I'm not even trying to jump into the Bible or anything, but whatever. My word for the week, I have Bible study every week. And my word for the week, this week was zealous. So they said that we had to, put more effort into something that we love or into something that we're doing. And right now I'm passionate about trying to help people become, a homeowner, because I started trying to purchase a home before, I think it was like 2012. It was a little small home. I think it was like $50,000. I got denied. That's when I was working at Walmart. I just stopped applying. And what I had on my credit report, I had 2 credit cards, and one of them was like $600 credit limit, and another one was maybe a $300 credit limit. And my credit cards were maxed out. I did not know. All I had to do was pay my credit cards down for my scores to increase. And then I had 2 collections. I had an AT&T collection, and I want to say a Dish Network neither one of them were over $300. I guess I didn't even know if I could pay them. Like, I just didn't know where to start. Long story short, it took me 10 years to jump back in the process and get approved for a home. And I don't want to see anybody else have to go through what I went through. So this week, I'm just going to try to come live and just talk about different things that go on during the home buying process. And thank you guys for the follows. We'll back on time. Well, if you're in the arrears, as long as you get on some type of payment plan, you should be all right when it comes to child support. And I'm going to say this. I had one client. He had child support in Florida. He had child support in Alabama. And he had child support in Mississippi, I guess. Oh, boy had been up and down the coast, I guess. But anyway, and none of his child support were less than $50,000 each. He owed $50,000 for one, $60,000 for another one, and I want to say $90,000 for another one. And this man got approved for a home. I didn't think he was going to get approved for a home. I did what I could do as far as the other things on his credit report. But when it came to the child support, there was just like nothing else I could do. And he called me one day and he just told me he was approved. He found a lender to do it. And I was shocked because he had so much debt in child support. But he does work. I'm going to say aerospace is what I'm going to call it, because he does work for build the planes or something, I think, for the government. So he did have some good income. 3 years for Chapter 7. I'm not sure, Miss Tay, because my lender tells me 2 years. My lender's name is Sharon Foster, and she tells me after bankruptcy for a Chapter 7 that she can get them in after 2 years. I met another lender at one of my home buying seminars that I was doing, and he told me that they had to be out of bankruptcy for 3 years. So I just came up with the conclusion that it has to be the lender, that chooses, or maybe they have their own specifications that they go by as well, because she told me 2 years. Thank you, Lexi Bubbles. I appreciate it. I appreciate it. Okay, you guys, if y'all got questions, drop them. Let me know. Yes, it's going to depend on your lender. Okay, just like when I said, and she told me this after we did our last seminar together. I was telling people that lenders do not want to see you with a late payment within the past 12 months. And it's something with child support and with child support. Even with child support. Now, she did tell me, not child support, I'm sorry, bankruptcy. She told me now, if you had to file bankruptcy, and she told me if you had to file bankruptcy because, say, your spouse died or like something traumatic happened, that they can approve you before that time frame is up. And she also told me with the late payments, the same thing. Like if it's a specific reason why, they can, pull some. She didn't deal in I'm saying pull some strings, but that's not the word that she used. She used the correct terminology, but that's just the best thing I know for it. But say that they can pull some strings and they can go ahead and get you approved, as long as your scores are high enough and you qualify everywhere else. So even some of these things that I am saying, even like the young lady who said she got approved with the eviction. Like I said, these are 5 accounts that I'm going through that may cause you to get denied for, a home loan. May. M-A-Y, may. They may cause you, and most of the time it's a strong percentage that they can if they're appearing there. Yes, it is a way to have your past addresses and names removed. The only thing, you can get you a piece of paper and just write on it. You can write it out. You don't even have to type it up. You just need to write a letter to each one of the credit bureaus. Tell them what your correct name is. Let it be your full name, middle name, and your last name. Let them know what your correct address is. Let them know that you don't want any more employers reporting and you don't want any phone numbers reporting. And let them know that they need to remove that information, that it's inaccurate and that it is out of date, like it's been reporting too long or something like that. But you need to let them know that it needs to come off, and you need to write a letter to do it. And I say that because I've called the credit bureaus numerous amounts of times and I've tried to get personal information deleted. And when they will delete some addresses, but some addresses they will not delete if it's tied to an open account or an account that's on your credit reports. They'll tell you that you need to contact that furnisher and get them to update your address and then call you back in order to get it removed. information removed. So I just write letters and just put it in the mail. You can write a letter, Equifax, Experian, and TransUnion. And you can also, if you write your letter, you can upload it in your Experian portal so that they can get it quicker, and you can fax to Equifax. If y'all want to fax to Equifax, it is 888-826-0598, and that'll get it straight to them. TransUnion, they don't have a way to fax them or to upload the letters. If they do, they done got it, away from me, and I'm missing out on it. So I just have to send my letter snail mail to them. Hey, it is worth it. It is worth it. It is worth it being a first-time home buyer. And Miss Tay, with those inquiries, you can call with those. You can call Experian is good for it. Experian is good for removing your inquiries when you call them. Equifax and TransUnion, on the other hand, sometimes you may get a good representative and they'll remove them for you. Sometimes they won't. With me, when it comes to inquiries, if you did not give your permissible purpose, say if you went to the car lot, say if you went to Ford and you told them, just pull your credit with them, and they pulled it with everyone else, you can go to identitytheft.gov and you can fill out that form and let them know that it's inquiries only reporting. I wouldn't list any accounts. I would just list the inquiries, because when you call, if you ever noticed, when you call Equifax and TransUnion, they ask you, do you have a police report or have you filed an identity theft report? If you file that report and you call Equifax and TransUnion, and they ask you that question, you can actually get that little code off of that form, and they'll go ahead, and some of them will take it off for you then on Equifax and TransUnion. But you'll need to have that FTC number off of that identitytheft.gov form, and you can call and you can have those inquiries moved within 24 to 72 hours from Equifax, Experian, and TransUnion. But now, if you do got inquiries reporting and you go to identitytheft.gov to fill out that form, remember, we're just doing it for inquiries that we didn't get permissible purpose for. Do not do it for any inquiries that you have an open account for, because they can cause your account to be closed. Because if you say that, you didn't apply for it, that's just like saying they're going to need to come get their merchandise or something like that. They can close your account if it's a credit card, if it's auto loan, or whatever. So just be careful when you do dispute the inquiries if you're going to be using that identitytheft.gov report. And yes, that is with inquiries. Thank you for the rose. I appreciate it. And thank you for the follows. I appreciate it. You guys, do you have any more questions about things that can stop you from getting approved for a home loan, or anything in general about your credit? If so, I am here. I've been doing credit since 2018, and just in my last system, I have, I guess they can say the numbers or whatever. I got the proof. I've helped over 400 people with their credit. So, and I do it the right way. I don't promote credit sweeps. I don't promote trade lines. And I'm not saying anything is wrong with either or. It's just a gray area when it comes to both of them. So I don't promote them and I don't talk about it. And I've still been able to help over 400 people. I can say I may have helped maybe one or two of them and they didn't have any results. But if that's the case, I give people their money back as well. That website for the credit reports, if you go to my link in the bio, you can hit it there. It's 28 reports for 7 days. It's on credit.com. I don't know if you go to credit.com, if they'll just have it where you can get the 7 days for free. But I know if you go through my link, you can get 7 days for free. Then you can downgrade the account and they'll show you all 28 of your credit scores. Because y'all know we got auto credit scores, we got mortgage credit scores, we got bank credit scores. Then we got the FICO 8, the FICO 9, FICO 10, and FICO 10T. Do you have to pay off an auto loan if the dealership is closed down and you no longer in the vehicle? It depends. It depends on how that vehicle is reporting on your credit reports and if it's inside the statute of limitations. I know I'm in Alabama. Most of my clients come out of Alabama. I have some out of Florida, Louisiana, Texas. But the statute of limitation is different everywhere. I can remember Alabama specifically, and I know for repossessions is 4 years after the date of last payment. After 4 years, they can't sue you, any longer. So you're not legally liable for that account. Figure out when your last date of payment was, Bree, And if it's been over 4 years, depending on your state, or you can Google the statute of limitations of debt in your state, and it should tell you, because it's going to be different. The statute of limitations is different depending on the account type. Credit cards are different. Like in Alabama, open accounts are supposed to be, the statute of limitations is supposed to be for 3 years. But sometimes, some kind of way, they'll send you a statement and they'll turn it into some kind of stated account. And it changes the statute of limitation from 3 years to 6 years. But I know for cars, it's 4 years. When I got ready to purchase my home, I had a repossession for $13,000 with Capital One. I had got it deleted from Equifax and Experian, and it was still showing on my TransUnion report. It was my first time buying a home. They used, my middle score wasn't TransUnion. I can't remember if they used Equifax or Experian, but whichever one of them they used, I thought that they weren't going to look at my TransUnion credit report because they weren't using that score. So I thought I could get away with it, but I couldn't. So when the lender looked over there and they seen that I still had their repossession for that $13,000, I had to call and make a payment or make a settlement. And I did not make monthly payments. I made a lump sum payment for $1,300. It was $13,000. I made a settlement for $1,300. I was able to do that because when I called them and I asked them how much, like, when did you sell the car? How much did you sell the car for? Why, like, what is my deficiency balance? They could not tell me any of that over the phone. So when they asked me how much I wanted to pay, I started at 10%. And when I said $1,300, the lady said yes. I did not think the lady was going to say yes, but she did. So I was able to take care of that repossession where I owe over $13,000 for $1,300. So like anything that's reporting on your credit report, you guys, whether it's negative or bad, I've had everything but eviction and bankruptcy. And I mean, I was able to do it. And remember earlier, I tell you, I had $100,000 in student loans and I was still able to do it. And I was not married. I'm single. I was able to do all of this by myself. And if I can do it, I know you can as well. What if the car was in an accident? No, well, you'll still have that balance left over. It depends on, did you have gap insurance or anything or no? If the car was in an accident and it still got a balance on it, just to figure out your statute of limitations first before you start picking, or as they want to say, poking the sleeping giant. Because like I said, I've helped over 400 people. And when we start sending out these letters, these dispute letters, my clients, they start getting nervous because they start receiving all this stuff in the mail now. And they're like, what's going on? What happened? La, 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 la. If it's still inside the statute of limitations and you start requesting paperwork from them, they can try to take you to court to try to sue you and garnish your check. So I like to look at the statute of limitations before I just start disputing a lot of accounts, just to be on the safe side. But if you are taking to court, as long as you respond back or you answer that, and you then sometimes you can still make a settlement with them anyway before you go to court. But you want to just check your statute of limitations first. And if the car was an accident and it was a wreck and it has a balance on it, there's kind of nothing that you can do about it now besides check your statute of limitations and see if you can make a settlement with them to try to get that account taken care of. You can also look for errors in the way that it's reporting on your credit reports. If it's reporting with an error, you can dispute it with the credit bureaus to try to get it removed from your credit reports. Look at the account number. Make sure they're reporting your full account number. No X's and no asterisks or anything like that. No symbols. They have to report your entire account number. And most of the time, those account numbers are masked. So like, look at your account number, look at the date of last payment, the date open, your payment history. Just look at everything and see if you can find an error. Well, you didn't have a repo. It's not a repo, so that letter won't help you. I can say I had a free repo letter in a couple of videos before where you could screenshot what to say, but your car wasn't repo. It was just wrecked, and then it still has a balance. What happened to the wrecked car? I know sometimes they're totaled out, but I know sometimes when they're totaled out, they make them salvage vehicles and stuff. So what happened to the vehicle? Like, what was done with the vehicle? That's what I would want to find out through the insurance company or something. At least I would just want to make sure everything was on the up and up. And if it is, I would just try to make a settlement the best way that I can. But you guys, when you do make settlements, at least try to make settlements in a lump sum instead of making monthly payments. And I say that because I had one of my clients, she was just signing up with me and she was so excited. She said, I'm working on paying my debt down. I got some payment arrangements made. I asked them, okay, how much do you owe? She said $1,000. I said, how much do they want you to pay? She said, they want me to pay $100 for 10 months. That is not a deal. Most of the time, you can make a settlement for a lump sum. Where she's owing $1,000, she should have been able to settle that for one lump sum of $400 or $500, maybe $600. But that's it. I would not make monthly payments. I would try to get everything done in an entire lump sum. And when I got ready to purchase my home, remember I told you I had that repossession on there, and I had a credit card on there with Capital One for $23.69 or something like that. And I want to say my credit cards too. My credit cards were maxed out. So what I did was I got my credit report. I sat down and I wrote down all my credit card balances. You know how much I owe, because you know your credit card balances need to be down under 10%. If your credit card balances go over 30% of your credit limit, if they report over 30% of your credit limit to the credit bureau, your credit scores are going to drop. They're going to drop like 70 to 100 points. So I wrote down how much I owed on all my credit cards, and I called Capital One. I told you about that phone call. They told me $1,300. They said I had 30 days to make my payment. So I wrote that down. I called Capital One about the credit card. I got that settlement, and I think I owed them 23. I think I may have to have paid them 12 for that, but I can't remember. So I wrote that 12 down, and I had one more thing. I can't remember what it was, but I totaled all of that up. And when I totaled it up, I switched on over there to One Main Financial. And yes, I know the interest rate was out of this world, but my scores were low because I did have those negative things reporting on my credit report, and my credit cards were maxed out. They were the only someone who would give me a loan with that high interest rate, but that was just fine because I only needed 30 days. So I went got that loan. And when I got that loan, I paid for that repo. I paid Capital One for their credit card, and I paid all of my credit cards down under 10%. I did not close my credit cards. I just paid them down under 10%. After I did all of that, within 30 days, I was ready to get a home. I had my FICO.com. I got an alert when my credit score said 680 something, and that's when I called a lender that day. I didn't wait for it to get any higher or anything. When I got that 680, I called the lender, and it was the same thing. My scores were the same thing that my FICO said. It was the 680. Why settle if you can discharge it? If you can discharge what, baby? Talking about debt. If you want to discharge it, you can. And like I said, it's tax season. If you get a 1099-C, that's like if you get some debt counsel more than $600 and you get that 1099-C in the mail, you do have to file that on your taxes as income unless you can prove that you're insolvent. So, but I don't know if you're talking about discharge. When you talk about discharge, baby, the only thing I think about is bankruptcy. And I do not just promote bankruptcy, because I've had people contact me who didn't have $10,000 worth of debt, and they had applied for bankruptcy. And I don't think that was enough. Not $10,000 to mess up your chances of approval, for so long. But why pay if you can discharge? If you can explain, maybe that'll help me. But as far as that, I'm not understanding, sweetheart. And Miss Princess, thank you for the follow. I really appreciate it. My scores rose up over 100 points from paying my credit cards now. I can give you a perfect example. After I purchased my home, and I can tell you exactly how many points. After I purchased my home, remember I told you that's when I went and got the Lowe's and Home Depot and all of that. My credit card utilization was under 10%. When my credit card utilization went to 15%, my credit scores dropped like 17 points. My credit card utilization went up some more to like 25%. When I went up to 25%, my credit scores dropped like 20-something more points. And I couldn't stop there. I just couldn't stop. So I kept using my credit cards. And when I went over 30%, my scores dropped an additional 70 points. So my scores dropped 3 times in 3 months from my credit card usage every month, because I went up a little bit. First month it was 15%, next month it was 25%, and then when I went over that 30% is when I had the biggest drop. My scores dropped over 100 points by going over 10%. My scores dropped like 130 points from going over 10% of my credit limit. Okay, B5. Well, thank you, baby. No, it's not, baby, but they need to make sure that they know what they're doing before they do it. And like I stated before, that's kind of not what I promote, sweetheart. I just don't want people to file bankruptcy, babes, unless they really, 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 really have to. But other than that, because like I said, I've had a lady contact me. This baby ain't got $10,000 worth of debt. This baby got two $2,500 credit cards and maybe a $300 medical bill. And she filed for bankruptcy. So no, I don't just say that. Like, they need to sit down with a professional, and not even the bankruptcy attorney, because that's basically how they make their money when you apply for bankruptcy. Just sit, and I'm not even saying with me, sit down with yourself and look at it and think about, do you have enough debt to cause you to get denied for the next 1 year, 2 years, or 7 years? Because depending on the bankruptcy, a Chapter 7 bankruptcy stays on your credit report for 10 years, and a Chapter 13 bankruptcy stays on your credit report for 7 years. So it just depends. It depends, Ms. Bizzle. Now, like I said, when I was applying for my home, I did have a collection left on there. It popped up. It was for AT&T. I was sitting there like a 680. When I got that last collection off, and I had already got pre-approved for my home, because I didn't wait after I knew my scores was high enough. I just went on, got approved, but I was still working on my credit. And also, too, they don't like to see in dispute reporting on your credit reports. When you apply for a home, they want you to get those remarks removed from your credit reports. But I was disputing a collection. The collection came off. My scores went from like a 680 to a 720. So it went up like 40 points. I thought that they would go by my new scores, because, after you're approved, before you go to closing, like the day before, they pull your credit again to make sure everything is still good. So for some reason, I was thinking, when they gonna pull my credit again, it's gonna be a 720. Maybe I get a better interest rate. But that wasn't how it worked. But when I got that last collection off of me, my score went up 40 points. But it all depends on exactly what's reporting on your credit report. T. Fleet, with that Chapter 11, I'm not going to be really, really sure about that, because I want to say that Chapter 11 and that Chapter 12 are those business restructuring or something like that. So I'm not all the way sure with with that Chapter 13, sweetie. I would actually have to go and do some research on that one. You're unable to get approved right now. Ms. Misby, at a $5.99, I wouldn't want to get approved right now. Your scores are probably low like that because you don't have a credit card, or if you do have a credit card, your credit card utilization is over that 30%. You can work on paying your credit cards down. And I like to tell people, if you have charge-offs and collections reporting, if you want to pay something, pay your charge-offs first, the ones that are with the original creditor. I wouldn't pay the debt collector first, but that's just me. Because when you pay a debt collector, unless they're going to delete it from your credit report. If they're not going to delete it from your credit report, I wouldn't pay a debt collector. I would pay the original creditor. I would only pay a debt collector after I requested validation. And when you're requesting validation, I'm sorry, you guys, from a debt collector, say if it's from a JCPenney credit card that I have, I'm supposed to get a letter from JCPenney on JCPenney's letterhead that states that they sold my account and who they sold my account to. And when they report on my credit reports, it should be reporting with a $0 balance, and they should have the collection agency's name that they sold that account to reporting on my credit reports as well. But I would pay the charge-offs before collections. And at $5.99, I would just work. I would just do a little work. It took me 60 days, and my scores were lower than a $5.99. It took me 60 days to do everything that I told you about. When I wrote down my credit cards, I made those settlements and all of that. It took 60 days. How long do we need to have a W-2 before we can apply for more? Now, that's going to depend. That depends on the lender as well, I want to say, because you can change jobs as long as it's in the same field, and this is just what my loan lady told me, and say if I just graduated from college, they can use some of that as well as far as work history. So that's going to depend. I'll say about 6 months, because she did tell me, because even if you're self-employed, you guys, self-employed people, she said with me not having a W-2, they would go back 6 months just to look at my bank statements in order to get me approved. And they call it a bank stated loan or something like that. But I'll say 6 months to a year, maybe, as far as those W-2. But see, I could be wrong about that, because like I say, it's going to depend on your circumstances. Say I used to be a pipe welder. Say if I was welding pipe at one place and then I quit my job and went somewhere else. She told me as long as it's in the same field, that it will count all together. I hope that makes sense because it's the same thing that I'm doing, construction and pipe welding. She said it would be the same. 682. Get them then. Get them. What are you doing? Are you working on your credit to get your scores up? If you can't settle, is it better to file for bankruptcy? It depends on how much debt you have and what all they can include in your bankruptcy. Yeah, 656 is okay. A 656 is okay as long as those are your FICO scores. Because make sure they are not the scores that you see on creditkarma.com. On Credit Karma, they show our Vantage scores. And the lender is looking for our FICO scores. So as long as those are your FICO scores, your FICO mortgage scores, because they're looking for our mortgage 2, 4, and 5. And when they look at that, say your scores are a 600, 660, and a 670. They're going to use that middle score. They're going to use that 660. So it depends, but just make sure they are your FICO scores. And if you guys need to know what your mortgage scores are, there's a link in my bio where you can get your credit scores for free for 7 days. And that is from credit.com. Like I said, you can go straight to credit.com. I'm just not sure if they have it available for you to get it free for 7 days. But if they do, you can get it from there. I just know I found it on my website. Well, I found it online and I do got that link in my bio. So you can get your FICO scores. Just make sure they are your FICO scores. No, I don't think so, Simon. I'm just not seeing it, sweetheart. Is unemployment considered as income you can use? I'm not sure. I would think maybe not, though. I would think maybe not. Good evening. Well, welcome in. You're new, Jasmine. I am happy to have you. Go ahead, Jasmine, forever. Drop your question. And I'm sorry, you guys. I'm just going to be honest. I haven't been on here in so long. I was scared. I haven't been looking at the comments. I was just like, I got my presentation ready and I want to present. So, yes. You like girls like that? Who, me, boo? Are you a girl, Michael? Or is that Michelle? Boom. Babe, I don't know, sweetheart. I never thought about it. Never thought about it. What about you? You do. It's okay. Credit Sesame normally just shows your TransUnion Vantage score. Because those are the two models, your Vantage and your FICO. And the Vantage scores are what we normally see on Credit Sesame, Credit Karma, and even sometimes, depending on who gives you with Credit Wise. Well, no, I think Credit Wise has your FICO 8 now. So it just depends. But no, Credit Sesame has your Vantage scores. How do I check my mortgage scores? Go to that link in my bio and you can click on it. It says, see my 28 FICO scores free. And they'll show you all 28 of them free. No strings attached. You don't even have to put in a card number. Why is the debt not removed from all bureaus? Because like the different credit bureaus are all different entities. Like TransUnion does their own thing. Equifax does their own thing. Experian does their own thing. And then some accounts do not report to all credit bureaus. Some accounts only report to Equifax. Some may only report to Experian and TransUnion. It just depends. Now, you can get some deleted off of Equifax and it still shows on TransUnion. But there is a law, and it's on a piece of paper at my house because I just don't make me repeat. I don't know what it is. I know it's an FCRA 623, but it is something in there where they do have to follow suit that states they should receive a carbon copy once. Like, say if something's deleted from Equifax, they should send a carbon copy to Experian and TransUnion and let them know that that item was deleted, and they're supposed to follow suit. I mean, they don't always do it. You can try to dispute that way. Say if it's deleted off of Equifax and it's still showing on Experian and TransUnion, the next time you go into dispute, you can go into dispute and ask them to follow suit. Good evening. How are you? And thank you for the follow. And it's only on Equifax, but babe, you got a 1 out of 3 chance, basically, of just getting it removed. I wouldn't give up. And if you guys are trying to dispute things, even if you're trying to settle things, just because it doesn't go your way the first time, that doesn't mean anything. They say whatever come fast, leave fast. Basically, if we don't have to work hard for it, it's not worth it, and we don't pay attention. So it's okay, but if you got it on Equifax, you got a 1 out of 3 chance, basically. I would just be disputing it, and don't give up if they come back and say it's verified. Ask them what was their method of verification and how they verified it, and look for errors in the reporting. Yep. Thank you guys for joining me. I really, really appreciate it. Red boy, what are you talking about? You said you're welcome. What's going to bounce back from that bankruptcy? Think they'll be okay? Will late payments prevent your home approval? If it's been in the last 12 months, it's possible. If you have a late payment in the last 12 months, the lender is going to see that you were just having, or they're going to look at it like you were just in a little financial crisis a couple months ago, and you couldn't pay your car note or you couldn't pay your credit card. And they're going to be wondering, were you actually able to recover from that financial crisis in 12 months? So sometimes the late payments within the 12 months can get you denied, but that will also depend on your lender, because I did have a lender to tell me it depends on the circumstances of the late payment. They may be able to go ahead and move forward and help you. I think she called it a manual underwriting process. So it depends on the lender. How late? One day? No, that's not how late payments work. Say if I had my credit card due today, the day of February the 13th, I have to be 30 days late in order for them to mark me late. And say March 13th, I won't really be 30 days late because February only has 28 months. Not 28 months, 28 days. So I would have to make my payment on the 30th or the 31st day or after for it to be considered as a late payment. But say if my credit card is due today on 2/13 and I pay it tomorrow on 2/14, it's not going to report on my credit reports as a 30-day late. What will happen is the credit card company will probably charge you a late fee, but it will not show on your credit reports as late. You can try Tay, especially since they are closed, but if they're not reporting with any late payments, I would not try to get my student loans removed because, like you stated, they are paid and closed. And I know with me, I have student loans on my credit report from 2003. And I would not want those to be deleted for anyone or anybody because there's 20 years of credit history that I have just from my student loans. Got late payments? Now you can, even though it's paid and closed, Tay, you don't have to dispute the entire account. Tay, you can just go in and dispute the late payments and try to get them removed. Now, I went in and I've just tried to dispute late payments on accounts. Sometimes they'll remove the late payment. Sometimes they'll remove the entire account. But you can just go in and try to get that payment history removed, or you can try to get the entire account removed. It probably would not be hard for you to get that account removed just because it is paid down and closed. Hey, Dimitri, how are you? Hey. Oh, you don't have no late payments? Tay, your student loans are probably helping you then. If they don't have any late payments, if they're paid and closed, I would just let them stay. I would let them stay. I wouldn't hurt them. Hippie weirdo, I see you. How are you? I miss you. I really, really do. I just see your name coming up on the bottom. I don't know where you at in here, but I see you down there and I miss you. I sure do. And thank you for the light. All right, Tay, thank you for joining me since I've been on here. I thank everyone for joining me. I really, really appreciate it. I'm going to try to come back tomorrow. What time did I get on here? I got on here at 3:00 today. I'm going to try to come back tomorrow at the same time, but I do want to talk about approval or getting approved for a home loan or something like that, unless y'all have. Thank you for answering, baby. You're very, very welcome. And thank you. That's what I try to provide. Great information. You guys, I want to be a resource for you. I do credit, but I can't do everybody's. So I do not mind being a resource and passing off as much correct as I think information anyway. I don't want to give y'all any false information, if that makes sense, because there's enough of that going around. We were told that we need to ask for a higher credit limit and only continue to use our credit card. Yep, Sherry, that's good. And you can ask for a credit limit every 6 months. Every 6 months. Get as much cushion as you need. That way, if an emergency does come up, and say if a $1,000 emergency comes up, if you got a $10,000 credit limit, it won't hurt you to go swipe your card because it's only going to be 10% of your credit limit on there. So every 6 months, ask for a credit line increase. Make sure you're keeping your balances low and you're making your payments on time. Every 6 months, ask for the increase, and it should not be a problem. They should be increasing your scores. Hey, Joe. Yes. I have a website. It is www.thecreditlaboratory.com. About business owners that you can still get approved for a home without a W-2. They do something, and I may be wording this wrong. Now, you guys, if I would use the wrong word or something, don't hold it against me. Hold it against my mind because I got so much stuff up there. But when it comes to being self-employed and getting a home, my lender said that she can get me approved for a home. The only thing that I need to give her is 6 months of my bank statement. Also, I want to say she said something to the extent of, I can't even think of what you call it, but it's something as far as even you can use your I'm finna use the wrong word, but y'all gonna know what I'm talking about. You can use your forecasted. It's not forecasted. That's not the word. But you can use your forecasted income, profit and loss sheet or something like that. But you have to get someone with an EIN number to sign off on it, like your bookkeeper or your tax person, and they can put on there what they think your expected income is going to be, and she can go off of that. Because she told me that since I do taxes and I'm an ER, like I got an EIN number, she told me that I could sign off on some of that stuff for some of her clients if they are if they need like their paperwork or their books reconsolidate. That's not the right word, reconstructed or something like that. And say it. Tell me what that means. The National ACA. Tell me what it means. The NACA. I can't remember. Something. Dimitri, tell me. Yes, Dimitri. You know. See, y'all, Dimitri. That's the realtor right there. That's a realtor that I be doing. Dimitri, tell the people, hey, that I be doing my home owner seminars with. Like right now, I'm in Mobile. He's in Birmingham, and I think that is it. That's what it is, your projected profit and loss statement. She said that I can even use that if I can get mine. She said bookkeeper to sign off on it. But like I told her, I do everything like that myself, So she said I would have to find somebody. She said, but I could do it for other people. But yes, that is it. And no, baby, I can't read that NACA. It looks so familiar. And I can't recall what those acronyms are for. So does that make the property in your business name? Nope. It'll still be in my name. They'll just be using my business income because I have an LLC. They'll just be using that income instead of my W-2s in order to get me approved because I don't get W-2s anymore. I just use my taxes and the income that comes in from the business because this is all I do. Okay, Demetrius NACA is a home buyer program. Yeah, I can't remember exactly. Do you know anyone who works with USDA and PA? Hey, Dimitri, do y'all do the USDA loans in PA? I don't know how far y'all go. I know some of our lenders are in all 50 states though. And I know Dimitri, they do USDA, FHA, all of them. So yes. Dimitri, let me know if y'all can do them in PA, if y'all can do loans up there. Dimitri right there. Him, I wish Mercedes, all of y'all. I wish I should have invited y'all. Yep. Okay, I was afraid. I thought it was at zero balance. I mean, now this is what I used to say, and this is what I was taught, and it's been so long ago, I can't even remember who taught it to me. But they stated for every 3 credit cards that I have, only one of them needs to carry a balance. So for every 3 credit cards, 2 of them can carry a zero. 2 of them can have a $0 balance, if that makes sense. You don't have to use all your cards at the same time. You can rotate them monthly because, after we don't use our credit cards so long, they will close them for inactivity. So if you're going to use one credit card this month, then turn around, pay it off, and use another card, the next month or so forth, just so you don't get shut down for inactivity. You can find out and let us know, Dimitri, because tell that I think they ready. They ready for some loans. What do you do if a debt was charged off and sold to another lender? The first thing you need to do is look at your credit reports and see how it's reported. Whoever the original creditor is supposed to send you a letter in the mail on their letterhead that states who they sold that account to. And they're also supposed to report that debt collector's name on your credit report, which they never do. And that's how I'm able to get charge-offs with a $0 balance removed, because they never report the debt collector's name. So make sure you review your credit report and see, if they're listing all of that, and if you got that letterhead from the original creditor. If you got all of that, you can ask for validation directly from the debt collector. Ask for validation per FDCPA 809, the Fair Debt Collection Practices Act 809. That's for validation. Ask them to provide you with validation. If they can't provide you with validation to show that they own that account now, you are actually the person that debt belongs to, and that the balance that they're trying to recover is accurate, I would not pay a debt collector unless I just know it was mine. I would make a settlement though. I wouldn't pay the full amount. And the original creditor would have to let me know that that's who they sold that account to, or that's who trying to collect on that account. But if it was charged off and sold to a debt collector, those collections, I'm not going to say what other people can do, but for me, the easiest thing for me to get removed from a consumer credit report are debt collections. Charge-offs, bankruptcies, they're harder. Late payments are iffy, depending on the account type, but collections are easiest. So if they've sold it to a debt collector, I would ask for a validation directly from the debt collector 7 times out of 10. The first time you ask a debt collector for validation, they can't provide it to you. If they don't remove it from your credit reports, I would ask them a second time. I would let them know, hey, this is my second time requesting validation from you, which you have not provided. You have not provided substantial, enough evidence to prove that you own this debt, that this debt belongs to me, and that balance is accurate. And if they're giving you a balance saying that you owe that, I need them to supply me with account statements from when that account had a $0 balance, because I need to determine where they got this balance from, if that makes sense. But I would ask for validation from that debt collector, and that's always good if they sold it to a debt collector. If you let it go out that far and they sold it to a debt collector, those are the easiest ones to get removed. And I want to say this before I even go any further. Just because an item is deleted from your credit report does not mean you do not still owe the debt, because you're still legally liable for the debt until that debt is outside of the statute of limitations. Oh, man, I done lost it. I thought it was just right there. Okay. Can I settle on a judgment from a creditor? If it's a judgment and you've already been to court, probably not, because the judge has already granted them all of their money. The judge has already said that you owe them all of their money. Before you get to that point, see if you can make a settlement. Like if you're served. Yeah, okay. I wasn't even trying to get on this. I was going to say this for tomorrow, but I guess I can do it tomorrow. I was sued by a debt collector last month, and I won in court. The first thing I did when I was served, I looked at that paperwork. You have so many days to answer it, depending on where you are. I answered it, and I showed up to court. The debt collector showed up as well, but they were not expecting me to show up. So when I showed up and they seen that I had already went through all of the paperwork, because that's why I took a certificate or like a little 12-week class, 8-week or 12-week class last year this time as a paralegal, because they sent me that paperwork and I didn't understand what was going on, and I wanted to understand, and I basically needed to understand because I do this for my clients as well. So I went to school, I took the little paralegal class, I answered that little paper back, and I had my own little, request in there. So when I got to court, they did not have everything that they needed. So they asked the judge, and here I go again. I don't know the right word for it, but they asked him, could we come back at a later date? And the judge asked me how I felt about it. And I told the judge I really didn't think it was fair that I had to come back up here because it was stressing me out. I done lost my hair. I done lost weight. Like everything, like I told them, they're mailing me letters, 2 letters a day. Like I just told them, I'm really, really stressed. And with them doing that, they should already had everything in order that they needed when they came to court today. So I told him I don't think it was fair that I had to come back. And he said, well, how about this? We give them 30 days, and if they don't have what they need when we come back, we'll throw it out. So in 30 days, when I went back to court, I want to say it was February to something. The day I was actually late that day. I was late for court. I was like 20 minutes late. I don't know if the people had been there, the debt collector, I don't know if they had been there and left because they didn't see me or what. But when my name was called, I was there and they weren't. And I told the judge, I said, well, Judge, remember you said if them people don't have what they need when we come back, that you were going to throw this case out. I said, well, Judge, it looks to me like they didn't even respect me or you enough to even show up for court today. So, what does that tell you about them? And he said, dismissed. So, yeah, I would just answer my stuff and make sure I go to court. And if you don't answer, say if you get served in the mail, you can call them to set up a settlement or a payment arrangement before you go to court. And that'll stop that. But they will put that in the court documents and you will be reliable, for that amount that you make a settlement with them with. But if they've already got a judgment against you, I doubt it, because it's just like if I take you to court and I win my court case of $1,000, I ain't gonna make no judgment after the judge says that that's what I can get, because that's what I can get. I wouldn't make a settlement for anything less either. Yeah, boo, a continuance. Y'all just don't know I'm bad with words. I be trying, but I'm bad with words and names. But I can count. And I know where to find them laws at. So we be all right. Okay, you guys. I appreciate y'all for joining me. Until tomorrow, I'll see you guys then. And again, thank you. Oh, let me cuss out of him.